Thank you for joining Live with Engage with Stacy and Steve Bishop. Wanted to basically kind of tell the story of how we all came together. It was back in 2025, Matt Darple, our strategic advisor, and I went to the Banking Automation Summit down in Nashville. And then I saw this gentleman who had so much knowledge about banking as a service, embedded AI, all of the things that were going on with FinTechs. I also had a chance to see another gentleman here from the Cincinnati area who's a CIO, CTO, and really learned a lot about what was happening in this space. So I had to chase him down for a couple weeks, and then I finally got him on the hook, and we started building this relationship. And here we are today. And
Gary, could I get an introduction to that guy?
Okay, absolutely. I think he's sitting here on stage. And then during one of the meetings that we were having, it was our president, Brian Sampson, and I, we were talking to Steve, and then this young lady just kept jumping in and being like, Gary, I think you really need to focus on this, or you guys need to go in this direction, and so on and so forth. So now we have both Steve Bishop and Stacy Bishop together to talk about banking as a service and how FinTech is reshaping the future of banking. So thank you all for being here. Steve, I'm going to start with you. Please give us an intro, kind of give us an update on your background and everything.
Yeah, so I'm Steve Bishop. I'm not sure who Gary was talking about, but it's been great to get to know him, and it's a pleasure to join everyone today. My background, I had 2 stints at Jack Henry on the core side first, and then I left and worked for AT&T and for Citibank, and then managed a digital platform for Jack Henry. Before joining a community bank, which is where I did a tech refresh, and I didn't know what BaaS was. I just knew I needed to figure it out, and that was when I started on this journey and building out a network and speaking at conferences where I got to meet some wonderful folks, and that's kind of led me to where I am today.
Fantastic. Stacy?
Yeah, well, thank you, Gary. By the way, thank you for calling me young. Stephen, did you hear that? I am 18 months older than Steve, and it is relentless with the age comments at this point. But hey, everyone, my name is Stacy Bishop, and I really actually never planned to be in banking or FinTech. I thought I was going to be an archaeologist. One day, maybe again, I'll get to dig in the dirt. But I grew up inside the Jack Henry system and ecosystem. And I just said ecosystem, Steve. You have full rights to make fun of me for saying that. It's one of the words I purposely avoid using. But growing up inside Jack Henry, I also had a chance to work for community banks. And while I was more specifically within the Jack Henry umbrella, I had a customer education role before being recruited over to sales. And I spent years out talking with community bankers about the Jack Henry core product set, the complementary products. I had a chance as well to serve in some revenue leadership capacities at Jack Henry before my husband, the one and only Mr. Steve Bishop, here on the call, decided to leave Jack Henry and floored me because I didn't actually see that career trajectory or path for many people. And then it turned out I found that in myself. I decided as well to follow Steve out into this big, broad world of community banking, and more specifically in my world, FinTech. And that's fun. I get to spend a great deal of time each week working with innovative FinTech founders, selling into the community bank and credit union environment. But I'd be remiss, Gary, if I didn't mention that when Steve exited out into community banking and decided to stand up BaaS, if I'm honest with you, I didn't know a lot about the differences between open banking and embedded banking. And I'm embarrassed to admit that perhaps now, growing up in a great organization like I did. But over the past 5 or 6 years, I've had a chance to learn alongside of Steve and from Steve in the embedded space and the other tech players that we get to interact with and the community bankers and embedded bankers. So it's such a pleasure to be here today and share a little bit of that insight, as well as anything else you might want to talk to the bishops about.
Well, thank you very much for the introductions. And one of the things that I think may get confusing for people out there, and we kind of discussed this before we got here today, was there's so much going on. There's embedded, there's fintechs, there's agentic, and all that kind of stuff. Will one of you all, kind of break that down and give us basic definitions on which one of these or each one of those are actually all about, please?
Yeah. Do you want to get started, Steve?
It seems like a loaded question. I was going to let ladies go first.
Well, these are big forces that are shaping the industry here today. So I'll tell you what, I'll take a stab at a few, Steve, and then love to hear where you might have a contrarian view, because I know you, and I know you're going to have a contrarian view. You'll want to redirect and add your own flavor. But some of the ones that you've mentioned, Gary, we are hearing a great deal of interest, some noise in the environment this past, easily 6 to 8 months around a couple of key topics. Stablecoin is a big one. I think everyone right now is paying attention to stablecoin by association and somewhat tangentially as well. More crypto, Bitcoin, they're making a little bit of a comeback. And I find that in conversations with bankers and fintech founders, we're all trying to find a really good use case and a perfect entrance into the American, the US banking market for this whole stable coin environment, the whole just digital coin deposit tokenization. There's a lot of terms, very nuanced space, if I'm honest with you. Those terms, Bitcoin, crypto, stable coin, deposit tokenization, they are not to be used interchangeably if we can avoid them. They're each something very different. So I think that's an area in this space that we all just have to pay attention to. You mentioned embedded. I'll let Steve tackle a little bit of embedded and why we're so passionate about it. But Steve, I mean, the other big one we just can't avoid these days is AI everything. AI and now agentic AI, much more beyond just generative AI and the bots that we would see on websites of the past. We are starting to see real internal operational use cases for banks and credit unions around the country using and delving into AI. And now we're starting to see this tipping point into agentic AI coming more into play. And we can talk more about that. But Steve, if Gary, if you don't mind, if I direct it to the other gentleman here, the other follically, I was going to say challenged. Should we just say a selective shaver? Would that be better?
Yeah,
I mean, my grandma, when I first shaved my head, was really upset. And I was like, Grandma, if God wanted me to have hair, he would have left it. I'm just helping the big guy out.
Oh my God.
She did not nearly as. I found it. My grandma.
Hilarious.
So no, I think, when you look at banking today, the majority of banks are still doing it the same way that they did it 50 years ago for the majority, especially when you're talking about community banks. They haven't had to change, so why would they? And that's not the world that we live in. And the answers today could very well be much different in 3 months, definitely 6 months, 12 months from now, because it's just happening so fast. And it's going to be, there's a slow shift. If you're not looking at it now, you're going to miss it and be left behind if you want to be relevant in the future. That's probably my biggest soapbox. But you still have traditional banking. So you got your checking accounts, your savings account, you're moving money, ACH, wires, and embedded or BaaS, whatever you want to call it. It takes that. It's a new distribution channel where you're taking those payment methods and embedding them, that account money storage. You're putting it in a fintech where it's down in the disclaimers. It says powered by ABC Bank or whatever that is. And that's where things were going. And then suddenly this year, like we've seen this slew of the OCC charter applications. And so the customers of these sponsor banks who are providing embedded are now having competitors from their former customers, because the OCC, if a FinTech is big enough, they can go apply for it. And right now they're getting lots of approval. It's really, like Stacy touched on, the stable coin. We're also seeing crypto. Kraken is an interesting one. They don't need a sponsor bank for clearing the fiat anymore. I believe that it's a 1-year charter, and then they have to keep things going correctly. Otherwise they'll lose that. And I think that's the biggest challenge. I won't get too far into that. We can revisit if you want, but like, so you have these new competitors coming in. So banks like have less of a window because there's more competition. The demand is going to continue to grow, though, especially in AI and the vibe coding world. There's no software that has an advantage right now, because like someone can just go vibe code it and compete with it and replicate that much more quickly, typically, than you've seen software developed in the past. Which then leads you to agentic, and it's not. So if you talk about stable coins, you need a digital currency if you have digital agents, and that's the next iteration. I think is like from embedded, where you're in a FinTech, to agentic, where you have agents performing tasks on your end, like on behalf of you, and there's no human interaction until I need a banker. And that's, like, if we go back to the COVID lockdown days, which I can't believe was 6 years ago, but we saw humans, when they were cut off from that interaction, they suddenly started looking for ways to be around people. And so as we eliminate this face-to-face, have this agentic commerce, I think there's an opportunity for bankers to become more authentically human. Like, so you'll see the pendulum swing. Right now we're going to go to the agent side. So you need to be prepared for that and act on that. But also keep in mind, how are you going to be there when more than that standard agent task is needed?
Yeah. And Gary, do you mind and I don't want to put too fine a point on everything Steve just said, because I do agree with it. I think it brings me back to, Steve, what you mentioned at the top of what you just said there. And that is, like, banks, we're at this very interesting point, this pivotal point in the industry where, like Steve said, we can't keep just competing on rates, on deposit rates or lending rates, the rate spread, and looking at those traditional elements. That's why I think we're starting to see these new technologies that you've heard Steve or myself mention coming into play as part of a competitive landscape that banks can pursue, that just take us down this path of difference.
Okay. Well, we were talking a couple of weeks ago before we went live, and I had no idea that like we talked about Mr. Big, you know what I mean, and how he's all of a sudden somebody who's very influencing the traditional banking and all kinds of stuff like that. I had no idea about that, and I was like, oh, well, that's what he was talking about during the Super Bowl. And all of the creative stuff that he's doing, and the different influencers that are now taking this route. And it just all kind of made sense to me after we were talking about that and we had that conversation. So I appreciate that. Thank you for breaking that down for me. So how are traditional institutions really adapting to, our expectations, and especially the younger generation's expectations? We all grew up with a checkbook and all kinds of stuff. Well, maybe I'm dating myself, but we all grew up with checkbooks, balancing checkbooks, all kinds of stuff like that. And then we got debit cards, and now we got credit card. And now we're in this new wave of these young folks. I don't even think that anybody's ever stepped foot in a bank before. I know my kids that are in their 20s probably have never done that before, unless they absolutely had to. So how are these traditional institutions adapting to their, all customers and attracting more customers themselves?
I mean, they aren't.
Oh,
Really?
Really?
If you're talking about traditional banks, they're using the same. They're not adapting. is what I'll say. At a base level, I think if you were to survey the majority of them, most know that they need to change. They're just not sure how to change. And, I've said this multiple times in the past, but talking with the CEO, and he's like, I've been in banking for 50 years. And when I started, we had two ways of moving money. We had checks and cash. And they've added all these new ways, but we haven't gotten rid of anything. And so there's a comfort level with bankers because bankers hate change. So it's a lot easier to ignore the peripheral and just focus on that traditional product set that they have. And when we talk about Mr. Beast and the Step acquisition, there are 7 million users that are on that platform using banking services today. And I didn't know who Mr. Beast was until my kids came home from school and started streaming it nonstop. And I wish I didn't know who Mr. Beast was, but no.
You don't mean that.
No, I mean he does an amazing job of taking a product and marketing it to the masses and building interest. And if you have this creator economy that's trying to penetrate your traditional market, the majority of traditional banks aren't going to see that coming, aren't going to be proactive in changing. And so, like, what can they do? That's where I'm like,
okay.
All right.
No, you go ahead. No, you go ahead. Because I'm going to disagree with you, but you go ahead.
No, let's hear it.
Okay. I think that what we consider traditional community banks, they're all looking for ways to attract younger depositors. I think that is just the way of the world. We can't pick up a trade publication this past year without seeing something or hearing something somewhere about the great generational wealth transfer that's coming at us over the next 20 years. And the figure keeps inflating a bit. Now I think it's over $100 trillion that we expect to change hands between older and younger generations. So I do think that a good majority of community banks and credit unions are looking for new products to roll out to try to attract the younger customers, whether they are ones that are focused on youth banking, like the green light model. We're starting to see a lot of entrants come in with teen banking, younger children banking, as well as generational banking, like making it easy for older generations to transfer money down to younger generations. So I think they're looking for products and maybe products within their current delivery channel. Steve, that's where I'm going to disagree with you. But you mentioned something, both you and Gary, that I think deserves great attention within the financial services space. And that is, let's look at these creators like Mr. Beast. Let's pay attention to what the dude is doing because it's brilliant. He already has an audience. He already has this distribution channel for which he can now then market these banking services, like you mentioned with the Step acquisition. And that's one of the beautiful things about embedded. And I know I'm very biased about this, but Gary, I think I mentioned this to you. As a person that travels, I'm not ever going to think it's okay or acceptable to go out to my bank's digital banking app and order an Uber and pay for an Uber. That is not the experience that I want, nor is it the experience that people much younger than me are going to want, the bank's credit union customers of tomorrow. Instead, people want that in-app experience. And that's where I think the challenge and the opportunity for modern bankers is to meet the modern youthful customers and future members where they are with those in-app experiences. And we should be paying attention to the creator economy for that. All right, Steve, where do you disagree?
I think I'll agree that the banks want to attract younger depositors. I just think they're doing a terrible job of it.
No, I didn't say they weren't.
If you look at like community banks, where do they rely for their innovation? It's their core provider. And if there's one thing we can say about the core providers, they're not innovative. It's not in their best interest. Like, they have locked in revenue stream with traditional banks. So why would they be on the forefront? And
Oh.
yeah.
Wow.
I don't know if I'm taking a contrarian view there, but
You're taking a contrarian. Gary, back to you. Back to you, sir.
If I let you two go on, I want y'all to stay married and stay happy, right? That's what I need to happen here. We're just trying to have some fun, and you guys are going back and forth. Goodness
we warned you, Gary. We warned you that
somebody is doing dishes for the next week, and it's not me, Gary. So,
Well,
all right.
as we all know, that AI is like clearly accelerating transformation, right? Like
Yeah.
we hear it all the time. Again, another example, I've been doing some studying and in some of the stuff that I learned down there, but we've heard lately a lot about, speed to market. How do we get our products to market quicker for our customers and things of that nature? How does AI and QA and automating our whole QA practice help us get our quality products into the hands of our customers quicker and things of that nature? So where do you see AI, and where are you seeing the banks really being impacted by that today?
All right, Steve, I'll let you go first.
Are you sure?
I am.
So AI and its impact. I told our oldest that I would say this in a public forum, so it's out in the ether. But Stacey and I were talking last night that AI agents seem to listen better and respond better than our kids do. So we're just going to create. we're going to have agents that have our same kids' names, so that we have one that listens to it. It goes back. I'll sound like a broken record for a bit, but like traditional bankers aren't doing it. They're scared of it. Like, what if I let my employees use AI? What if your employees are using AI? They're just either doing it on their personal device if you're not allowing for it. So banks need to look for ways to lock it down, because you want to have that security of how it's being used. You're not going to stop your employees from using it. So therefore, you need to find tools that can deliver it for them and do that in a safe and secure manner. And I think that's something that people are they still know about it, but when AI was gaining noise, it was all about the customer chats, and that's not where you want to focus. It's on how do we take that employee that we have and enhance their abilities? How do we take the Steve Bishop that's working the back office banking transactions and increases throughput by 4x or 10x or whatever that number is? And as simple as your email, inboxes should be much more cleaner these days than they have historically, but organizations are very hesitant to open that up. And I think it's at their own risk, because you're going to fall behind, or you're going to allow your employees to do it in a way that would not be acceptable to you, because they're still going to leverage that as a tool. And I've said it to Stacey and I don't know how I worked without AI before, because I rely on it and it makes me much better than I was. And so if I'm a leader of an organization, how do I take that and benefit my employees from it? Let's not worry about layoffs or reducing staff. Let's just take this we have and make them so much better. And I realized I went on a huge tangent that was not answering your question. But I think traditional banks need to figure it out. They know they need to. Otherwise, they're going to risk being irrelevant and being left behind. But Mrs. Bishop.
Yeah, I think there's a danger, Mr. Bishop, painting with such broad brushstrokes and saying community bankers are scared of it and they're not doing it, because I don't think that's the truth. I saw a study recently William Mills put out in association with another organization talking about AI adoption inside community banks and credit unions last year versus this year. And the numbers are pointing up. But here's the thing, whether it's discouraging for me as someone that positions FinTech relationships, or whether it's just something to be recognized, I don't know yet. But here's where we're starting to see banks use it. It is more internal. So we have a lot of FinTechs out there, many of which I work alongside as well, that are pitching AI and their solution. That's great. It's no longer a selling point. Instead, bankers are looking for ways, just like you said, Steve, to make themselves more efficient operationally. And that's what I'm seeing. So like I don't think we can say bankers are not using it. We've seen banks baby step into it. And I'm saying banks and credit unions take some baby steps into it by turning on Copilot or, well, really more Copilot because most of these organizations are Microsoft shops or solutions. And that's okay. It's a great place to start. But I happened to sit in on a session at the Ole Miss Banking and Finance Symposium last, I don't know, November-ish, I believe. And I heard this super interesting panel with these bankers, and they were discussing how they were implementing and upping their game with AI internally. And it starts with understanding where the bottlenecks are in the process. Steve, it makes me think of like your old you're not old, but in the past when you're with your Six Sigma training and your approach to business, I think we're starting to see banks and credit unions kind of look at AI as a way to reduce some of that friction or throttle up their throughput or output, like you've mentioned, much more than they are, let's acquire a brand new FinTech that has AI to help us do something new. They're almost using it to clean up shop internally, clean up the house internally first before they layer on something new. That's been my read on things.
And it takes me back to some of the demos that I saw at the summit. I was like, oh wow, so some of these fintechs are already, loan origination and speeding up that entire process. It was just amazing some of the demos that I saw down there and some of the use cases on that whole challenge that they got graded on, and we had to pick a winner at the end of it. I thought that was very, very interesting. But are there some other use cases that you all know about, Steve, or that you were involved with when you were standing up everything at your old place? And you may be standing them up now, but what are some good AI use cases that have been proven successful?
I think the majority of people use AI as just a glorified Google. They ask questions to it, and they're missing out on.
You're so broad. Okay, go ahead.
No, like it's easier to ask a question, but I'm not like having it do stuff for me, right? Like
okay.
That's what the stats say is like there are very few people that are actually using it beyond a like search engine sort of like. Yes, it could be great to have your knowledge base and get information from it. But can you ask, like, are you asking it questions about how to operate your business? And so, like, use cases, like AML, BSA, you have like very data heavy, transaction driven. AI can identify those themes and trends. KYC, I have a friend that has started. Like, he's like, the mafia is the Mexican cartel is gonna call me because we're stopping KYC, but our AI is not only stopping that account opening, but going back and flagging it at other institutions and shutting them down even more than just that initial. And I'm like, just give me a call, but use an encrypted phone when you do. But
what is KYC? What is that?
Your customer. So when you open an account, you have to verify who they are. They are who they say they are. And they have been flagged on OFAC or any of the watch lists. Also, like, do they have charged off accounts? And there's all sorts of things that as a financial institution you want to go through before you open that account and make sure that they are a legit customer.
Got it. Excellent. Yeah, and another key takeaway for me was, all of the regulatory challenges, the different regulations. How do you make sure that everything is secure? As a matter of fact, I had a chat with a cybersecurity manager at a financial institution here in town, and he was like, we're pushing, trying to utilize AI within our organization. And he was like, I have all these developers that are developing code, but one of the main things that we have to do is, PII, protecting this Social Security, all the data and everything that goes around that. And we have to make sure that none of that sensitive information is getting out to different places. So what are some of the risks and challenges that banking and financial institutions face today with actually really trying to integrate AI into their business?
I might start, Steve, and then I'd love to hear your opinions on this. I think some things that I am hearing anyway are like traceability or audits. Let's start with audits. You have to make certain if you have AI within your solution, you need to be thinking about validating or proving with an audit trail or log how you arrived at solutions. So it's not that different if you think about how we in the banking industry as a whole, we have to ensure that we can validate how we decided at an approve or deny decision on the loan side, or how we decide whether or not we're going to pay an NSF for this person versus that person. We need to be able to validate our reasoning and our decisions to make certain that we are representing our customer or member base appropriately as part of our fiduciary responsibilities. So I think AI companies have to be thinking in those terms as well. We're starting to see some regulatory hints about those types of expectations from examiners. So being able to validate, we served up this policy or we made this decision because of this. So I think that audit piece, but additionally, the lineage, the traceability throughout the organization. So it's not only just justifying your decision, but where you arrived at getting the information to make said decision. So did we pull information from a driver's license? I strategically advise a company on the intake layer of the lending process, and they do a fantastic job. They're deep, deep, deep in AI, LLMs because of one of the founders' history. So they do a great job of saying, we pull this information from here, this information from here, this information from here. So you can trace that throughout the entire process from the intake layer through ultimately to funding and having that loan on the system, and then providing that validity, the audits. So I think those two pieces are ones that I'm sure most AI companies, I hope anyway, they're thinking about and validating and proving for bankers. Because in that type of regard, I think we all become more comfortable with AI, including those conservative bankers that Steve's been mentioning. What about you, Steve? What do you think?
I mean,
AI.
You asked about the regulatory perspective, and do we still have regulators? No.
We do. In fact, we do, ladies and gentlemen.
I read I was reading earlier this week, and the comments were like, it may be a looser regulatory environment today than it was 2-3 years ago, which I can't disagree with that. But while administrations change, the regulators largely stay the same. And so you have to be a prudent, whether if you're around financial services, anything that's regulated, you have to be prudent and like not just plan for the next 2 years, but is your business going to be viable regardless of the regulatory environment that you're in down the road? So like it's easy to say, oh, we can get away with it today, but like how are we making sure that we're protecting that data? And it goes like when it comes to PII, and then like if you go, if for some reason, probably not this audience, but like Europe has its whole all of these other. So you have to look at your vendors and like, is your data going overseas? Because then there's a whole separate slew of regulations that you have to monitor. And so I think it's making sure that you define your strategy. Like first have a strategy. Don't rely on your strategy, but like have that strategy, execute on it, and do it in a pragmatic manner that makes sure that you're covering that and not losing sight of we're opening this machine learning to our employees. So it's going to have data that we have. We need to guardrail that so it doesn't get outside our institution.
Yes,
sir. Yep.
Another thing that I learned, and we had talked about this earlier on in the conversation, was that in that you always have to keep the human in the loop, and you have to rely on your experienced professionals to make sure that whatever type of solutions or things that you're looking into regarding AI, that they're able to fact check it and make sure that it is valid information that they're getting back. So
Right.
what are your thoughts about, human in the loop, making sure that, like you said earlier, that it's not to replace people's jobs, but it's to enhance them and make them even better, make them more efficient, make them even more valuable. What are your comments around that?
Big
Yeah, I think-
fans.
Yeah, so I mean, you want to train it. Like, it's a machine and it's learning. Like that's so like you can train it. Depending on what that activity is, you definitely need a human in there, definitely in the beginning, and then as you gain confidence in its performance, you could step back and do more of an audit than just have it like checking like you do today. With your humans, so you audit that process and make sure it's acceptable. And so you can get to where there's not a human in every interaction or a process, but you don't want to start there. You want to work your way up that, and then make sure you have checks for that long term.
Yeah. I might even tack on there by saying in a lot of these cases, the LLMs being used might not be specific to the financial services environment. And let's be honest, you all, we use a lot of acronyms. We use a lot of letters to mean a lot of things, which could be different by industry. I have started seeing some FinTech players that are providing LLMs around our industry, but not all. Back to Steve's comment, we do have to think in terms of training these tools. And that is what they are. They are tools to make us more productive, to make us more effective at our jobs. But for anyone that's ever tried to use AI to write something for them, you know if AI is writing something for you, which is why you have that human in the loop experience. If you're using it as a thought partner or to create, I don't know about anyone else, but sometimes I am politely hateful towards my AI. I will always say please and thank you, but I'm not afraid to tell them you are way off base. You know nothing about this industry, and they need to be reminded that ultimately you are the expert, you are the professional, and you are there to redirect them and to ultimately monitor their output is sort of the way I think about it.
Fantastic. So what do you see as the next big disruptor? We talked about the digital currencies. We talked about embedded finance. Is there something else out there that we don't even know about yet? But what do you all see as the next big disruptor in this space?
I think I know what Steve is going to say.
I'm going to defer to this.
Should I write it? Should I write it down and then see if you say it?
Like a game?
Yeah.
I might just change it, but why don't you go first?
I think we've already talked about it, but agentic AI is really going to change the game. And I think that's what I was going to write down on the piece of paper for Steve. Is that what you were going to say? It is, we're on the forefront of it yet. We are not yet at full-fledged adoption of AI agents doing things for us and transacting for us. There's a lot of opinions about whether people will ever do that or whether we're going to be comfortable with it. But I had the thought the other day, you guys, for anyone that has an Alexa device, I should whisper, or a Google Home device, but we're more of an Alexa household. And if I add something to the shopping list, Alexa's immediately going to ask me if she wants me to just go ahead and purchase that on my behalf. And that is an agentic experience. She already has our card information, much to Steve's chagrin. His Amazon's over here like every day, sometimes multiple times.
Christmas every day. There's like
every day at the Bishop's.
So familiar.
So for anyone that thinks people are uncomfortable with agents making purchases, Amazon, they're not exactly inexperienced with people and their purchasing decisions. No, they have mountains and mountains of data about the Bishop household and about how other households like us are transacting. And if they're doing this, and now I'm seeing ads while I'm watching and streaming shows where I can purchase directly from my TV now, not exactly an agent there, but not exactly that far off from it either. I reference those examples because I think it's a little bit closer than we think. And Steve, I wanted to mention that because you and I had a disagreement about this about a week ago where I said, no, you're wrong. No, this is at least 2 to 3 years out, until I added something to our shopping list the other day and told Alexa just to go ahead and buy it. And I thought, darn it, he was right. I'm doing it. And I wasn't even giving him credit. So I had to come clean and tell you about that, Steve.
But I appreciate that.
You're
I have
welcome.
no doubt you were right, because you're never wrong. It's my guiding principle. But I think there are like the two big things I see. Agentic is one of them for sure. And I was working on setting up an agent here recently to work on my behalf, and Amazon shut down the API for the shopping list. So I have a workaround for it, but like, I don't expect everyone to have an agent that they're going out, grabbing these APIs and shopping for them, but that is available today. And it's going to be even more easier next week and the week after and the week after. Like, things are just moving so fast. And but like, I completely agree. Agentic is gonna, like, that's how do I take my banking products? I've got embedded is a whole new distribution model.
Mm-hmm.
Agentic is a different transaction model. Like, it's the same transaction, it's just occurring in a different way. And so it makes being tech forward much more important for institutions. The other one I mentioned earlier, whether it's a creator or a FinTech, you're just seeing a lot more competition in this space, because it just takes a checkbook, and we can explain what that is to the kids. But like, if you want to charter, the OCC is granting them. We've had the numbers are startling. How many have been approved? How many have applied for this year alone? We went through this huge gap of where people weren't even trying to get charters, and now they're just flying off the shelves. So you're in a increasingly competitive environment that's also constantly changing. So you got to be paying attention, buckle up, because it's one heck of a ride we're on right now.
All right. Final question. If you had one piece of advice for banks and credit unions that are either just really starting to tiptoe and begin the transformation or in the middle of the transformation, what advice would you give those type of organizations?
I'll go ahead and go first. Gary, I think I'd shared this with you, and it's something that I try to just keep in mind in my own life. But I think it really begins with being curious. Like, banking is not the same as it was a year ago, 5 years ago, 10 years ago. And it's definitely not going to be the same even 6 months from now, or 12 months from now, or at any point in the future. And I think bankers that we have traditionally thought of as not interested in exploring changes, or old-fashioned, or too conservative, they're not. They just need to now, I hope, think in terms of being curious and be willing to explore some of these conversations and determine, well, is agentic for us? Should we think about embedded? Is a stable coin play on our radar? Ask those questions and be open to the answers. Be open to exploring with some of these vendors that you feel like you have a relationship with along these lines, asking them for things like modeling out and helping you with projections and doing your own work in that regard. So if I could suggest anything to people, it's more of a 3-part: be curious, stay open, and honestly be willing to rethink the way that you envision your organization moving forward.
All right, Steve.
My initial answer was going to be to ignore your intuition, but I didn't want to be. That might be a little too far.
This guy.
I think it's not wrong. It's if there is something that comes up, are you choosing that path because it's comfortable, or are you going to is there a new way? We no longer, you can't sit in your branch and just wait for customers to come to you. That is, those days are gone. I mean, you'll still get some in some communities, yes, but that can't be your go forward strategy. So
right.
There are new solutions being invented every day, coming to market, and don't be comfortable. Be encouraged and excited about the change, and see how you can implement it in your organization. That's the only way you're going to stay relevant, because the pace of change is so fast right now. And yes, you can stay the same for the next year and still be in business. But what about 2 years? What about 3 years? How long is your runway? Because it's going to start eroding. It's going to erode much faster than you think. And so that's why it's imperative to stay on top of your game and learning and just making sure that you're keeping your institution relevant for the future.
Yeah, well, you know what? I got to tell you, I've been learning a lot about this and this whole space in this area. And I really, really do appreciate Steve and Stacy, you all jumping on with us right now. And, we found out that we have over 300 years of combined IT consulting experience that's well aligned with the banking, financial institution type of space and area. So we're really diving into making sure that we help our clients modernize their enterprise and start to, really start to experiment in some different areas there. But I just really want to thank you for your time and for the relationship and the laughter after just meeting you for a couple minutes down there in Nashville a year ago or so. So we want to thank you for doing this interview with us. Let's continue to stay connected in talking and helping each other. If people want to reach out to you guys and things of that nature, where can they find you? I know that you have Ambassador, but I'll let you tell it.
Yeah. Well, I think both of us try to stay active on LinkedIn. We know that people, in that way, you can absorb information whenever it's suitable for your schedule and makes sense for you to explore things. So, Stephen Bishop, you are STEPHEN Bishop on LinkedIn, and I am Stacy Bishop, nice and boring with just a CY Bishop. And you can check us out as well for the embedded conversation at Ambassador. Gary, he was kind enough to mention Ambassador. That has a very unique spelling that coordinates with the Banking as a Service acronym. It is AM, capital B, lowercase aa, capital S, lowercase s, ADOR.com.
All right.
Hope you got that. Jeez.
Yeah. Well, thank you again very much. Thank you for doing this live with Engage. Had a lot of fun. I hope everybody out there who's listening, as a matter of fact, I think you'll be able to see this on YouTube if you weren't able to break away, or if you're watching March Madness games and having beers today. But definitely go out and take a look at it. Very informative, lots of fun. And maybe we'll do it again sometime. Thank you.
That sounds great. Gary, thank you. Thank you and the Engage team for having us.
Absolutely. Thank you.